Welcome back to the Precision Trader. In this video, I just wanted to help ones that have the goal of or already trading the ES or the SPY, and you're trying to get a little bit more precise with your entries and exits and overall just trading either one. Well, what I help ones to see is if you really want to be able to trade ES really good, you need to be able to trade SPY well. If you want to be able to trade SPY well, you need to be able to trade and use the ES as well. They're both based off the S&P 500. Of course, the ES is the futures market. SPY is the equity stock of that. So with that said, to get the best or be as precise as possible, you need to be able to trade both. So what are some things that you need to use to take advantage of? Well, first thing it starts with was having the number one leading indicator in the stock market, which is an order book. And who has the best order book technology out there? The Rolls Royce of, Lamborghini, whichever the highest end vehicle that you like. Well, it's Bookmap. Bookmap has the best order book there is. And of course, what is an order book? Order book simply tells you where the vast majority of the orders are sitting looking to get filled. Now in Bookmap, it does it with a nice visual heat map here. So pretty much it's very simple here. Goes from black, little, no orders, little to no orders, to blue, to white, to yellow, to orange, to red. So the closer you get to red signifies, even more orders. Once you start getting into red and orange, that tells you that this is a significant area where people are looking to buy and sell. And that is a very valuable knowledge because we know the market loves to gravitate towards major liquidity. And this is what this is. All these orders in the order book sitting there, this is liquidity. This is look at people looking to buy and sell. They're ready to go. So the market wants to gravitate. Market makers want to push to these levels. So it helps us to form a bias. And today was a prime example. Here, the ES order book started the day way down here. All the liquidity, the major liquidity was up above. Little to nothing below. So what was our bias all day long? Hey, they want to keep pushing. Look for key spots to buy reversals because they want to get up to this 4,000 area on the ES. Now, with that said, unfortunately, SPY has a horrible order book. Very hard to differentiate where the major liquidity, it's just so much going on there that it doesn't work. So I'll do you a favor. Don't waste your time. Don't waste your time. The only two that you want to pay really much of any attention to is the ES, or for SPY would be SPXL. Those two right there are the only ones that can consistently give you insight. So with that said, for some reason my candles disappeared on this end, but with that said, what we're looking for here is liquidity levels below the major levels, and that's give us insight of where it's a good place to take profit or where it's going to likely push to. In this case, we're going to push to that liquidity level, to this one right here, rejects off of it, pushes back to it, rejects off of it again. Market starts dumping. Where are we looking? You see buyers trying to come in here, they bounce it a little bit. Buyers come in here, they bounce it. Buyers finally come in here. This is where they, hold it for the day, bounce it up to this liquidity, down to more buyers and sellers here, and then eventually get it up to that big level, that first big level, 39.95. And by the end of the day, they finally grind up and hit that 4,000 level. So with that said, an order book is extremely valuable when it comes to helping you see where the market is likely to want to push to and where you should be taking profit or looking for reversals. So can't emphasize that enough. We have a course designed just for the order book, helping you understand it, strategies, all that kind of stuff. Because again, I don't have time to go into all the different strategies and all that, but just understand the order book is a must. Okay, another key thing that we use in trading SPY and the ES is, let me move over here to my charts. All right. It is being able to correlate price on the SPY and ES. So that's our next big thing is how can we correlate SPY and the ES liquidity. Because, for example, if we're using the ES order book and we're trading SPY, because again, I understand why a lot of people, they don't want to split their money up between a futures account and a stock account. They'd rather have it all just in one place. Well, if you're going to do that, well, if you're going to just say you're just going to trade the SPY, and for example, you don't have to trade anything else. Take for instance, I have one of the traders in my server. He came in, only wanted to trade the SPY, which is fine. I have a channel dedicated exclusively to SPY and ES trading, and that's all he wanted to trade. And over the last 3 months, after learning the strategies and everything, a little bit of part of what I'm talking about today, and even more deeper is he's been able to take a $2,000 account to a $60,000 account. And again, this is screenshots, evident. So it's not me just saying this. I've been able to see this progress along the way. So with that said, you don't have to trade 50 different stocks, or you don't have to trade the ES, or just trade the ES. You can trade SPY and do very successful. A lot of people, they just feel like, oh, I only want to trade futures. Well, that's fine. But at the same time, you want to be using the SPY to help you along the way. So with that said, how can the SPY help you if you're trading ES? Well, first of all, you need to learn how to line them up, especially if you're trading SPY and you want to get the benefit of ES. So if we're going to do that, we have to be able to convert the prices. So my opinion, the easiest way to convert the prices on SPY is, one, in TradingView, make sure this price chart is moved to the left. Okay, so you can move these to the right or left. I keep mine moved to the left. All right. Another thing you want on here is click on the candles, right click, lines. You want a price line on both sides. Okay. Now, once you get a price line, you're going to pick a point away from the price line to be able to line up. So in this case, I'm going to pick this point up here and that point right there. So I want these spots to line up, the price line and the top of that. So scoot this over, and see that I'm just off. Need to expand it just a little bit more. And I think that'll do it. Okay, that's pretty much, yeah, tick for tick there. Now you might say, well, as soon as I move, it's going to mess up. No, you can zoom in, zoom out, go to the left, go to the right, and it's not going to change. So zoom in, zoom out, go to the left, go to the right, zoom back in, come right back to it, and it's right there. So again, the only time you're going to mess it up is when you try to grab it, move around, or you get over here and start scrolling in and out on these price increments. So with that said, that's how you line up the price. Now, the next big thing that you need to successfully trade SPY and ES, I'm only going to cover two, one being the liquidity, the other one being algos. So what are algos? Algos are levels, computer levels that are calculated and computers buy and sell off of them. So others may define it a different way. Yeah, don't get caught up in that. The big thing is there levels, there's calculations that computers are buying and selling, because we know the majority of the market is computer-based trading. So again, these computers have to have algorithms, stuff to buy and sell off of. There's not somebody behind the computer all day buying and selling. So what makes a stock turn around to the penny at this spot or that spot or that? Okay, I can understand in a general area, but to the penny, that's the question. So I'll tell you what, we're going to zoom back here. Let's go back a couple days. Let's go back to the start of this day. All right, so this is the 19th. All right, this is the 19th. Let's come over here. Let's go back to the 19th on this side, and then we're going to throw our algos on the chart. All right, the 19th at... Okay, let's get this pulled up here. All right. Now, let's see here, right there. This pretty much lines up the futures market and the regular market. That looks pretty accurate there. Okay. All right, so now let's put our algos on the chart. All right, so now I've got our algos on the chart. Now again, these levels are on your chart to start the day. I don't calculate these lines. It's not me putting support and resistance. I don't do any of that. These are automatically put on my chart to start every day. So I have a very good insight. I have good insight to know where are the computers likely going to be wanting to buy and sell? Because again, when you see a stock going up and down, chopping back and forth, a lot of that chopping back and forth is because again, your computers are buying and selling off these algo levels. So prime example here. Now again, why is SPY extremely valuable to help trade the ES? Because SPY algos are more reliable than ES algos. SPY is more, these algos are more pinpoint for SPY than ES. But when you combine them, it can help give you even more, give you more insight and give more power to a certain area. Because I know that whenever, for example, right here, I have 2 algos on the ES and I have 3 algos right here on the SPY. So this tells me that this level is going to be very important. In the same way down here, we had 2 or 3 levels down here on the SPY. Again, whenever we start having algos that come really tight together, okay, or algo gaps, when we start getting gaps between these algos, those are significant levels. And again, like I said, in the course, go into more detail how to take advantage of them, all the different strategies. But today, I just want to show you the value of having algos and using algos in your trading, especially if you're somebody that's day trading, scalping. Very, very valuable. So with that said, SPY comes down, pops up to these algos right here, rejects, finally gets support on them, gets in the algo gap. Where does it go to? Algo above, pulls back on it. Support, where does it push to? Next algo above, pulls back on it. Algo rejection, support, algo rejection. Then we push up, rejects at the algo, pulls back, eventually gets on top of it, pushes up, support on this algo, pushes up to this algo, rejection. So with that said, extremely, and again, this ain't just, I'd say, oh, that's just some special, that was just that day. Well, here's the next day. Market opens, rejects off the double algo, comes down to, actually I had a triple algo here, bounces back up to the double algo, down, gets on top of the high of the day, support, where's it heading? Heading up, of course, gets here, rejects off this algo, gets back on top of this one, support, rejection. So again, like I said, you can see all these different areas where the market is respecting these algos. And if you come to the current day, today's low today just happened to be what? Right there, the double algo, right in an algo gap. So this is today's algos. With that said, I mean, you can look through here. I mean, it's just tick for tick. So with that said, I primarily focus on my SPY algos. And when I see an ES algo in that same area, it adds extra emphasis to that area. Okay, so it brings more values. I mean, prime example today, let's look at the low. I bet you the low today was an ES algo as well. Let me get over there. All right, yeah, that looks like it. Okay, so SPY, ES, both of them right there. All right, this one's scaled in a little bit more than that one, but anyway, algos were actually pretty lined up today for the most part. But anyway, with that said, here was the low, double algo at the low, and you actually had a double, or close to a triple algo right in that same spot on the ES. That's 5 algos. I mean, and it's on the other side of an algo gap. That's another thing too we go into is understanding the algo gap. So that's 5 algos in that area. So yeah, that's a very, very strong indication that the market is going to want to, bounce on that area. Or if it pushes through, let's just say you're buying the dip here at the double hour, it pushes through, that there's a very high likelihood that for some reason it dumps through really hard. It's going to go right back and test it, give you your break even, and and give you an opportunity to get out of that trade. So with that said, liquidity, order book, book map, and algos are a must if you're going to successfully, in my opinion, successfully scalp, day trade the ES and the SPY, and really take your trading to another level. So with that said, I hope it helps you. And also too, with that said, I'll show you the server. Again, this is not just fictional stuff here. I mean, we're using this stuff on a daily basis here. Prime example today, I'll just show you the last trade of the day. SPY 397, had a double algo there at 397. We had our short entry right there at that double algo. And what did we get? We got a nice dump on that double algo back to the algo below. And from there, it popped up, continued up. But anyway, we got our 50 cent, our dollar dump off of SPY. And of course, that'd been a nice move on ES as well. So with that said, I hope that helps you. If you want to come by and see how to take advantage of the order book and algos more for your trading, feel free to come to the server. The link's below, and appreciate you watching the video.